This is Chad Toyne with a Thursday, September 18 Market Minute from Trader PhD Ag Marketing. In the corn market, everything looks like we have a typical, normal, healthy uptrend in the corn market. We left behind an August low over a month ago. It left behind what's more or less a V bottom. The rally since then has been substantial. In December corn, that's about 40 cents, and that's nothing to sneeze at. Not only are we seeing a firm tone, but we're seeing the market shrug off bearish news. Specifically, the WASDE came out on Friday, gave us bearish numbers, and the market responded by giving us an initial knee-jerk move lower, but then it surged higher on the day, up about 10 cents on Friday, if you remember. After farmer selling stepped in on Monday, Tuesday surged higher, not only erasing all of those losses, but they exceeded the WASDE high made on Friday. That's why I say that everything looks like we've got a normal, typical, healthy uptrend in the corn market. So now what? Just keep pushing higher? That's a possibility. As harvest progresses, we might find more yield surprises. The U.S. dollar may keep slipping, helping to keep exports hopping. But more realistically, when we have a counter-seasonal year, making a low in the summer, and we have an uptrend moving into harvest, we usually see a pause. And a pause is the most likely thing to happen. But let's take a look at the calendar. We're here in the middle of September. We're probably about 7% harvested, and there's a big report day looming in less than 2 weeks. September 30 has the Qtrly Grain Stocks report. Unless we get some kind of a surprise landmark trade deal agreement with China, which mostly affects the soybean market more than the corn market, the price action for corn in October will be framed by the harvest progress, yield discovery, and the Qtrly Grain Stocks report. WASDE reports come every month, but these grain stocks reports come only every quarter. They are almost always market movers, or at least they pivot the markets to shift them into a different gear. In other words, we still have the opportunity for higher prices, but we also have things lining up for the market to follow what they did last year after they traded higher in the month of September. And that is that we can have the corn market chop sideways during October and November, mostly at elevated price levels. In soybeans, there's a bit of a different setup. Yes, we had an August low, similar to corn, but the anticipation of biofuel demand, namely bean oil, has been the main driver. The hot August helps. We've seen beans fall a bit lately, mostly due to the EPA's SRE reallocation proposal. It's causing uncertainty. The EPA has floated proposals that would raise biofuel demand, but those seem to be putting demand out further in time and less in the more immediate future. Beans will also be watching the talks tomorrow between Presidents Trump and Xi of China. In wheat, the lower U.S. dollar is helping float all boats when it comes to exports. U.S. crop export sales rebounded after having a disappointing week last week. Even cotton had a good week. Taiwan pledged to buy 3.6 million metric tons of wheat from the U.S. over the next 3 years. The amount is not a large increase over what we've seen from recent purchases, so the market is seeing this more as a steady buying commitment rather than a large volume purchase. Wheat had a nice rally over the past week or so, and now we're seeing a bit of a pullback. Typical price action after having a nice week, but the size of the rally that we had is hopeful that this slow bleed might be looking to come to an end. Too early to tell. I might have nailed the August low prediction weeks ahead of time for corn and beans, but wheat is a much tougher call. I've got less to go on. We just don't have the setup for me to see if a market bottom might be on the horizon. But I'll say this, the slow bleed price action that we see in wheat is the same price action that slowly squeezes out the week longs, and you rarely see the low being put in place when it happens. You only see the low after it's a month old. Could we see a pivot after the Qtrly Grain Stocks report? I hope so. Just stay on top of your price targets. They continue to treat us well. In cotton, we came so close, within just 6 ticks of hitting our overhead price target for a sell signal in D's 26 cotton. Stick with the target. We could hit it yet. I mentioned earlier the lower U.S. dollar and the higher export sales probably gave cotton a boost, but mostly we are still in the sideways trading range, and I'd expect it to stick around for a while longer. In the cattle market, I'm more concerned about the possibility of a short-term dip in fats and feeders. This pullback just didn't get the leg higher I was hoping for. We are trading soft here yesterday and not that much better today. Brace yourself for a possible hard 1 or 2 day sell-off. We are likely carving out a sideways trading range, and once that's done, we will look to price something inside that range, hopefully on the upper end. In hogs dipped down hard earlier today, and we have regained much of those losses. With what's going on in cattle, I'm looking for clues if hogs are in longer-term danger. I think that there's more downside danger in hogs than in cattle for the longer term. I wouldn't count out hogs quite yet. That's it for today. I'm Chad Toyne, and this has been Trader PhD. Past performance is not indicative of future results. Futures trading involves substantial risk and is not suitable for all investors.